Hey, good morning. This is Matt Isker with Sharetec. I've got a special guest with us, Daryl Empen from Gas and Electric Credit Union over there in the Quad Cities of Illinois. And today, Daryl and I are going to talk a little bit about ultimate checking, or what people call high rewards checking accounts. But before we get into some of that content, let me introduce you how well Gas and Electric are doing. For the past 3 years, Daryl, your credit has won the cunas Benefits of Membership Award. Congratulations on that.
Thank you.
Is that easy to come by for you?
I won't say it's easy, but it's something we take great pride in, returning more value to members. We always try to pay the best deposit rates in the area and better loan rates and low fees. And that seems to be reflected in that award. So very proud of that.
Well done. Well done. Well, today we're going to talk about one of the products that you're offering, the ultimate checking product or high rewards product. Daryl, when did you initially offer it and why? Can you start with that?
Yep. So we began offering way back in 2009, and that's when interest rates were quite high. If anybody remembers those days, I think when we first offered it, we were paying 5% on that checking account. And really, we have a very competitive credit union and banking marketplace in the Quad Cities, and we felt we needed a product both to drive our debit card revenue, but also just to try to compete in the marketplace and attract new members, because it's a very competitive marketplace at that time. So, yeah.
And did you see results right away? Is this a thing where it takes a number of years to be productive? What are your thoughts on results in the first year versus now?
Yep. So in the very first year, I had to go back and look at this. So we added 87 new checking accounts, and we were quite small at that time. And then we had about 300 accounts that switched over from our regular checking account to we call it our green squared checking. So at the end of year one, we had about 385 new checking accounts, but even more impressive, we added $3.1 million in new checking balances, which was 77% growth in checking balances in that very first year. So again, granted, some of that was from our other share accounts or other products, but still 77% growth in 1 year. We were blown away in that first year. So, and it's only grown since then.
Wow. So Daryl, can I ask you, how do members qualify for those fantastic rates?
Yep. So for us, the three things, you have to use your debit card 15 times in a month to qualify. You have to get your statements electronically, so be signed up for e-statements. And then you have to have at least one direct deposit in your account every month. We don't put a restriction on the dollar amount, so it doesn't have to be your entire paycheck or anything like that. But you have to have at least one direct deposit coming into your account. If you meet all three of those criteria, then you get the high dividend rate. If you don't, we do not charge a fee or anything like that, but you just get the normal checking account rate.
I see. And do you feel like this has attracted new members to the credit union, or is this primarily moving current members over from one checking account to the other?
We've certainly seen both. But we definitely feel like it's attracted new members. When I went back and researched it, so since 2008, we've only had membership growth of about 8.5%. We open a fair amount of new accounts every year, but we close just as many. It's been a real struggle for us. However, since 2008, our checking accounts have increased by 57% during that same period of time. So our checking account penetration went from 45 to 66%, which is among the best in the country. And then, related to that, which is one of the reasons we offered, is our loan to share ratio during that same time has gone from 65 to 83%. That was before the stimulus money hit this year, and everybody's loan to share ratio went down. So, we've seen definitely growth in checking accounts because of our penetration rate, but also we've seen, growth in loans along with that as we've gotten those new members.
Wow, Daryl, that's fantastic results. Well done.
Yep, very happy with it.
Are you seeing other competitors, local credit unions or local banks offering a similar service? And is that one of the reasons why you offer this service?
Definitely. Again, we have a very competitive marketplace. So we've got a couple banks and credit unions offering a similar product. Some pay a slightly higher rate, but on a lower threshold. So we started out paying up paying that rate up to $25,000. Last year, we did lower it down to $20,000. So some only pay up to $10,000 or some up to $15,000. Some charge a fee if you don't meet those requirements, and we don't do that. So this definitely helps us compete against those other competitors and make sure we're attracting our most active members. And that's really what it comes down to for us is, yes, we want to drive debit card revenue and increase usage of that. But if we're going to pay an above market rate on a product, why shouldn't it be the checking account? Because that's going to hopefully drive that primary financial institution usage. And so if we have their checking account, we're more likely to get that auto loan, to get that mortgage. And that's where we're really competing. So if we're going to pay a above market rate, let's do it on the checking account and attract those new young members that are going to use us instead of going to another institution.
Oh, that makes sense. Okay, so Daryl, is there a way that you're able to sign a lot of your new members up to this particular product? Are there some steps that your credit does to ensure they get this product?
We're really, since we don't charge a fee if you don't meet those requirements, 88% of our new accounts are open the green checking instead of the regular checking. The only time members typically don't do it is if they know they're just not going to use the debit card. Or they don't want to use home banking and get their statements electronically. But the vast majority of new members, if they use their debit card at all, sign up for green checking, and that's what we want. So, and it really sells itself. So once they hear about the high rate and there's no downside, the only downside is they earn the regular checking rate. Why wouldn't you sign up for it unless you're not going to use your debit card?
Well, Daryl, I think I've got two final questions for you, and we'll let you go. The first one is, sometimes board members may say, why are we going to pay on this? Seems like we're paying them to use this service. Let's use the money somewhere else. Do you feel like there's an answer you can provide to some board members who may feel that way?
I certainly understand that, and especially as rates have fallen and stayed low for so long. 2.4% is by far our highest rate, and it stands above the market. And there's great pressure when all of our other rates are almost less than 1%. That how can we pay this 2.4% rate? But they've seen the results in our loan to share ratio. They've seen the results in our debit card revenue. Even though we've had debit cards since 1997, we're growing debit card revenue 6 to 8% every single year over year. And so they see the results, and they see that we're attracting the new young members who are going to use all of our other products and services. So really, since we've had it for a number of years, they are all in, and there's not much pushback really on the product. They understand why we're offering it on that product.
Okay, good to know. All right, last question. Let's assume now you're speaking to other creditors who don't have the service. They want to start the service. What tip do you have for them, Daryl, to start this?
We were only about $40 million in assets when we started, and it's very easy to administer. So Sharetec helps you get it set up, and you set up your parameters, and then it's just training your employees to sell that product for when somebody comes in to open a checking account. To know the qualifications and sell that to members. So it's very easy to set up. There's not much administration. It calculates the dividend and makes sure members qualify as part of your month-end process. So don't let your size prevent you from offering this product. Really, from the smallest to the largest credit union, I would say go for it. Absolutely.
Well, great. Well, Daryl, hey, thanks for your time today. We appreciate your insights. You've been very generous with it. Thank you.
Thank you, Matt. Good to talk to you.
You bet. Bye-bye.
Bye-bye.